GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. Well, it was interesting. If you cast your mind back 1 week ago, I was perhaps a little bit early in calling a top in the dollar and calling a bottom in some of these other major currency pairs. Actually, what happened is that we saw quite a lot of strength in those majors throughout the week, and it was really just Friday when we saw a massive bounce back in sterling especially, but also the euro. Also saw dollar yen roll over quite spectacularly. So that was interesting. So still potentially looking at a reversal here. I'll go into more details in a minute. Quite a few central bank decisions going on this week, so that could be the cause of some volatility. So potentially a good week in trading when these trends first get going. If that is in fact what we're dealing with, when the bottom is in and the trend breaks out in the other direction, that's some good trading opportunities. So let's see what we can find. Any comments you have, please drop them in the video. If you have any requests for particular strategies or currency pairs to follow, let us know and we'll be happy to indulge. Otherwise, just please click that like button. It really helps if you like these videos. So now we are looking at the euro-dollar currency pair. And if you remember, yes, we were talking about this bullish divergence last week. So through the lows there and through these lows here in RSI, suggesting there could be the potential for a pop higher. But you can see what happened is that we rallied up into that supply zone, which we had referenced, and the price rolled over, made a new low. So if you had your stops under that low, probably you're out of the trade. But it came still slightly higher than this previous low. So actually it confirmed the bullish divergence again, and we had yet another rally pretty much off the 118 level. And you can see that here's just above 118 where the previous lows were, and then we just dropped below it and rallied up right back to that supply area again. So I would say this is a false breakdown. So that signal, so our first signal, if you like, that there could be a turnaround happening, that the trend is about to reverse to the upside. The first sign is the bullish divergence with the RSI. We had to wait a bit longer than we thought with that. Then we had the false breakdown. Now we've had the move above the RSI resistance. We're not overbought yet, so this is not a done deal, but there are a few signs rising that that euro dollar is potentially bottoming out here. So we're testing the supply area at the moment. Normally you don't want to be buying into a supply area, but it's starting to look like this 118 level can hold. And actually I seem to have lost it from the chart here, but I think the next demand area is where we did explode this. So we had the first lift off out of this same area that we've been looking at for a while, that we'd highlighted last week even, from when this rally really got going around 118. We talked about that. We dipped through it. Now we're up above it again. So I think this is done. But if we do pull back again, you could see we're edging down into it. This, where we popped out of this demand area, probably starts conservatively around, you can see how the price kind of broke. If I zoom in a bit, it's probably better. You can see how the price kind of broke out here. This is where people would have been kind of scrambling to change their orders as the momentum took over. And as price rolls over, this is where the orders could come back in to resume the buying. Those who weren't able to get filled in this area down here. So potentially drops down to this demand area and then rallies up, and again, some more overhead supply to clear out. But if it does get through there, I think it probably doesn't stop at 119.50. I think we're probably heading up for a test of 120. Admittedly, I said the same thing last week, so it may not be the case. And certainly this downtrend can resume. Maybe it will just be a test of the 20-day moving average and we drop lower. That would be the top of this supply area plus the 20-day moving average. So not a bad trade to actually try and take a sneaky short up here. That could well work out. It's in line with the trend. It's just going against some of these momentum signals suggesting that the trend is reversing. Let's move on to the pound. Similar sort of story. I talked about that massive rally in the pound at the end of last week. It was interesting because we had some quite soft economic data from the UK. Obviously, the England football team were in the final at the weekend. Now the pound is dropping. I'm sure it's not related to England missing their penalty kicks, but nonetheless, we've held the lows, which we didn't even have a false breakout. We actually didn't even get down and take out the low, and we've had this big rally up. So it looks quite promising that there is some sort of low in here, and actually you can see if we extend our RSI line, it works pretty well in terms of talking about how the price kind of first made a lower low, now it's made a higher low, and it's made a small higher high. Now we're correcting back. It's either going to be, I think, probably this previous peak here, or if I just readjust this area here to where the price really broke out. This was our consolidation, and the price broke out here. So if it can come back all the way down to 138 and just above this demand area down here, I think step one, step two, these are opportunities to see the price again reverse to the top side. Note we didn't quite get overbought, so there will certainly be plenty of people willing to sell this market, but it just looks like it's turning a little bit more bullish. It may well just be getting sideways, a bit choppy now, heading into the summer instead of a really strong trend, but just seems like the downtrend is reversing, and maybe in the short term at least some opportunities to play that reversal towards the top of these ranges. So in euro it was 120, in sterling it's 140, are those kind of round number resistance areas that we could maybe get a retest of this week. Dollar yen, I mentioned, eventually reverse lower. So you can see quite a clear-cut rising trend line on the RSI. We'd been overbought, we saw that big sell-off, and we had this steady rise, which wasn't really very full of momentum. And then we had that false breakout, a bit like we had the false breakdown in the euro, and we came down and we took out this rising supply line and the trend line. And that is something I'd mentioned last week, was that the taking out of that trend line would be the sign that this little slow-paced uptrend is reversing. And now we've had the bounce up towards the trend line and up towards that that broken both support and a supply area up here. If we could nudge a little bit higher, it would be 110.50. So a bit more of a round number and a proper test of these lows. That would be ideal. We haven't gone quite that distance yet. This might be all we do. And then I see, if this dollar weakness continues, then we are going to come down and take out this. Was resistance, obviously, then it was support, now it's support again for the moment. But if we take it out, it'll be support and then turn to resistance on any bounces. This is the daily chart. We're still above the 100 period moving average, but on a 4-hourly basis, here you can see the area is a bit better. We are below the 20-day moving average as it's plotted on the 4-hour chart here. So looks like momentum's changed, doesn't it? And so we're in a bounce at the moment. Rejected 3 times at this level. This might be it. Ideally for me, we'd come up back to this zone that was proved significant in the past. Saw the breakdown, come back, something into this kind of area, 110. Probably 40 to 50 would be ideal, but almost looks like as of the start of the week, we're not going to get there. Moving on to the precious metals markets, and so gold's done a whole lot of nothing since it broke above 1800 last week. It's just going obviously very sideways, bounced into that supply area that we'd mentioned before, where that we had that big one up here where the price really crashed. It was over about 2 days, I think, when the price really crashed. And we've basically recovered the second leg of that crash up to here. I still kind of suspect that there's not quite enough. If you remind ourselves about this daily chart, it's quite clean in a way. because we had this double bottom, we rallied out, but then the price collapsed and it just stopped at the neckline of that double bottom, and it's actually formed another double bottom on the short term. But it's just, the question is whether we can actually rally up any further. If we do manage to make some more progress out of this shorter term double bottom, to me, a natural target would be the retracement of this leg lower. So if we can move back on the 4-hour chart, you can see the 61.8 comes right alongside this, the neckline of this top here, which whatever you want to call it, double top or bit of a head and shoulders, but either way, you can see this is where the price turned sideways and then massively broke lower. This is a big level, 1850. So that'd be a natural upside target if we are able to hold it. The fact that we've gone so slow after the breakout doesn't really, after a breakout, you really want to see the momentum kick in, and this is not momentum kicking in. So I suspect that we actually roll over back under the neckline here and maybe pick up some more support just a bit lower, where the price started to pick up and didn't sell off here. You can see the price momentum popped up to the resistance, maybe down to here, which is around 1775, might be another dip buying opportunity. But if we do take out the neckline, the bullish impulse is going to be less strong. Still worth a go down here potentially, but I would say it looks more bearish if that is the case. So there you go. Not such a clear-cut situation in terms of direction on gold, but I would say maybe the price levels that we're dealing with in terms of the bottom of the that 1750 on the downside, 1850 on the top side are the kind of major probably targets, with some opportunities for entry points and breakouts in the middle. Okay, switching gears to silver. Let's look at this daily chart first. We can remind ourselves that we're still in this major range that we've been in almost a year now. If you think that's really kind of kicked in, the top in silver was July, I believe. Was it August? It's just early August, and now we're in July again the next following year. So very sideways action. This move to the top side, this uptrend, was pretty slow burn, and this downtrend was pretty high momentum. So my suspicion is, in terms of silver, that we might have another leg lower, breaking below this this key level here, which has held a support so far at 25.50. 25 is a big level. You could pick up some demand again there, or we just head from much kind of more significantly lower prices down here at maybe the just under 24, which is this low here, 23.80-ish. We could be in for a test of 23.80, maybe a bit lower, and then it bounces off before the bottom of the range. It's not a trending market, but in the shorter term, the momentum from this seems to be lower, right? And we're just kind of going sideways. We've tagged the 20-day moving average and we've rolled over from that. We've not got overbought yet. Probably a slight bearish bias here, but that would change if we could get at least above this 26.70 level here. Moving on to the oil market. This is one of the more clean-cut opportunities, I think, and really the opportunities is fading as we speak. Because, okay, let's remind ourselves that the big deal is that we talked about this for probably, 3 weeks in a row maybe, of how we're basically challenging the 75 and the long-term resistance, and we did get a almost perfect sell-off from that long-term resistance. And it's getting some confirmation as well. This is the daily chart. I always forget to zoom in so it's clearer on the webinar, but here's the bearish engulfing candlestick down through the 75 level. We had one more follow-through day which took us below this rising trend line. Now we've had 2 days bouncing up into the trend line and we're rolling over a bit from there. So it looks technically very nice for a breakdown from major resistance, a rebound into old support, now resistance, formed by the trend line and by the supply area. There's a few reasons to think the price can roll over here and at least tag 70 again. I suspect maybe even drops a bit lower than that. for what it's worth, here's a rising trend line through these last set of lows. So even if there's no reason to turn really majorly bearish on the oil market, maybe we drop down to touch this rising trend line again. Maybe, well, this is the 120 moving average, doesn't necessarily make sense on a daily basis, but we might need a retest of the 200-day moving average, which is obviously a bit lower. S&P 500, I mean, this is the daily chart. I'll drop down to the 4-hourly chart at the moment, but just wanted to kind of point out that it's still a pretty unambiguous, and I say this every week, pretty unambiguously bullish market. You know, we cleanly took out the resistance on the second occasion, moved up, had a slight sell-off, we rallied straight up into record highs last week, having a slight dip this week. But I think until we fall below this, it's like 40 level-ish on the RSI, and maybe if we drop, it might happen about the same time as falling back under this, you know, former resistance, now support. If we fall back under that, maybe the momentum would shift a little bit more bearish, but you know, every sell-off has been generally bought into. It's still a pretty strong market. Where to buy into this one? Well, this is our kind of pivot point where that was support. We bounced up to a record, dropped through it, fell into this demand area through here, which I've removed since, not really useful now, but then rallied up, tested it, broke through. So maybe another test of it if we can get down that far and then move up to new highs again. Slight RSI bearish divergence on the 4-hourly chart, but not really something that I'd be too phased about, to be honest. I think this trend is up. I mean, if we take out this low here, you know, there will be a, you know, again, it wouldn't even be reason to turn bearish. It would just be looking for better opportunities after a deeper pullback. And last but not least, well, in a way it is least at the moment, because I was going to say last but not least, but Bitcoin has been doing absolutely nothing. For range trading tactics, literally nothing's changed in the past, 3 weeks? So actually buying and selling the bottom of the range has been pretty sweet, pretty low risk trading as far as it goes, especially as far as Bitcoin goes. Presumably we're going to break out of this range at some point, but we're still in this larger range of 30 to 40. And don't look too, you know, don't look too close to breaking out of it at the moment. Wasn't even any real volatility at the weekend either, which is normally when some of the big price moves really kick off, is on a Sunday, but didn't happen this time. A lot of uncertainty about regulation, I think, and a bit more intervention from governments in Bitcoin. So people just kind of sitting on their hands. They still believe in the story, but they're not too bullish at the moment. So hence the price is going sideways. And I think really until we get a breakout of this short-term range, one way or the other, we don't really have too much of a feeling which way this price is going. The RSI momentum is still generally bearish, but we haven't gone oversold for a while, but we also haven't been overbought for ages either. So potentially a bottom being put in, but you know, no confirmation yet. All right, so that's all the major markets I'm covering for this week. I hope that was useful. If it was, and you want to see next week's video, make sure to click the subscribe button, click the blue bell, so you see notifications about the new videos coming out. If you haven't watched the week ahead already, please do so. And thank you very much for watching. Good luck trading this week.